In the world of digital ads, it feels like the goal is always just more. More clicks, more views, and definitely more revenue. But what if I told you about a company whose secret to success is actually built on saying no to money? It sounds totally backwards, I know, but for an ad tech company called Affle, it's a strategy that's absolutely crushing it. So let's just dive right into that. Saying no to revenue? Why would a company whose entire purpose is to make money actively turn it down? It feels like it goes against everything you learn in Business 101. But you gotta stick with me here, because this isn't some kind of mistake. It's a very deliberate and honestly a very powerful strategy. And there you have it, straight from the CEO himself. He's not just admitting it, he's proud of it. He actually calls it part of their competitive moat. Their unique defense that keeps competitors at bay. They are intentionally turning down business that doesn't meet their super high standards for profit. This isn't about shrinking the business, it's about being incredibly selective. And that really brings us to the big question for today's explainer. In an industry that has completely obsessed with growing at all costs, why is Awful choosing discipline over just raw numbers? What do they know that everyone else doesn't? Well, the answer is in how they play the advertising game, which is completely different. Okay, so here's where the mystery really starts to unravel. The whole reason they can afford to be this picky is because of their conversion-first business model. It's a totally different way of thinking about value, and it is the engine that drives their entire philosophy. So, the term you need to know is CPCU. It stands for cost per converted user. Now, forget about paying for views or clicks. That's old news. With Affle, advertisers only open their wallets for a real, concrete result. A sale, a sign-up, an actual, valuable customer action. You're not paying for the ad, you're paying for the customer it actually brings you. And this really lays it out perfectly. In the traditional ad world, the advertiser pays for the ads and just crosses their fingers hoping they work. All the risk? It's on them. Affle completely flips that script. They essentially tell their clients, look, you only pay us if we deliver you a paying customer. And just like that, all the risk of the ad campaign shifts right onto Affle's shoulders. And that's the bottom line. It's that simple. If they run a huge campaign and it doesn't get the results the advertiser wants, Afflex makes nothing. Zero. Zilch. This super high-stakes model forces them to be unbelievably disciplined. They just can't afford to mess around with low-quality campaigns because the risk of failure is way too high. And that's why they say no. So you're probably wondering, how on earth can they take on that much risk and still make money? Well, the answer is their technology. They've built this incredible moat of their own tech that makes them exceptionally good at actually delivering on their promises. Let's just start with this number, 36. That is the number of patents, either granted or filed, that Affle holds. So this isn't some company just using the same tools as everyone else. Nope, they are building their own, deeply innovative, and more importantly, defensible tech from the ground up. And these patents aren't random at all. They are laser-focused on solving the biggest problems in advertising. Their AI can predict which user is most likely to actually buy something. Their fraud detection system weeds out all the fake bots before they waste a single penny. And their ability to identify users means they find the right people who are ready to convert. Every single patent is a tool that helps them lower their risk and deliver results with confidence. And in today's world where data privacy is everything, they've also got this, an ISO certification for information security. Now that's not just a fancy logo, it's a globally recognized stamp of approval. It tells their clients that Affle isn't just effective, they're also trustworthy and secure. But listen, all that amazing technology is only half the story. The other half is where they use it. While most of their competitors are busy fighting over the same old markets, Affle has built its empire by going in the complete opposite direction, to emerging markets. I mean, this chart really says it all. A whopping 73% of their revenue comes from emerging markets like India and Southeast Asia. This is no accident, it's a deliberate choice. While other companies are battling it out in North America and Europe, Affle is mastering a much more complicated playing field. So why do that? Well, because these emerging markets have this unique challenge that plays right into Affle's strengths. You have this massive ocean of online users, but only a tiny, tiny fraction are the high-value, ready-to-buy customers that advertisers are actually looking for. It's the classic finding a needle in a haystack problem. And this is where it all just clicks into place. Affle's technology was basically forged in the fire of these incredibly tough markets. They've spent years training their AI to sift through billions of data points just to find those few golden users. They've gotten so good at it that when they do move into more developed markets, the problem almost seems easy by comparison. So does this whole disciplined, tech-heavy, emerging market strategy actually pay off? Well, let's take a look at the results. This is the reward you get for saying no and focusing only on what really matters. First step, check this out. A 19.1% revenue growth year over year in a recent quarter. That shows that their selective approach is delivering strong, profitable growth, not holding them back. And it's not a fluke. They have posted 10 straight quarters of top-line growth. This isn't a one-time thing. It's a repeatable, sustainable business model that just plain works. And what about the sheer scale of their success? In just one fiscal year, they delivered 393 million conversions. And remember, we're not talking about clicks here. We're talking about 393 million actual purchases, signups, and valuable customer actions. That's incredible. So what's next for them? Well, their game plan is pretty simple, really. First, they want to get their current, happy customers to spend even more with them. Second, they'll bring new clients onto the platform in the markets they already dominate. And third, they're going to take this proven model and expand it into new countries and totally new industries. They're also planning to grow by buying other companies. Right now, they're looking at about 10 different companies to find the absolute perfect strategic fit. Not just anyone, but a company that can be totally transformed by their high-margin, conversion-first model. And all of this leaves us with one final thought. The Affle story really challenges that whole growth-at-all-costs mindset you see everywhere. They've proven that saying no to low-quality revenue isn't a weakness, it's a superpower. By focusing on real value, building an amazing tech moat, and mastering tough markets, they've built this incredibly resilient, profitable, and fast-growing business. So it kind of makes you wonder, maybe the most powerful way to grow isn't about chasing every single opportunity, but about having the discipline to only chase the right ones.